how to read price action using ICT concepts, how to anticipate the next potential move that could happen in a short term and as well as the long term, how to do it that with using the ICT concepts, which I'm talking, the one that comes I'm talking about are the market profiles, which is expansion, retracement, reversal, manipulation, accumulation. And the other concept would be the time concept, would be the open how locals concept. I'm going to show you guys a quick example on how to read the price action using these two specific concepts. There's many other ways, such as using CRT, using if close above higher prices, if close below lower prices, if wick above lower prices, if wick below higher prices, as well as many other ways. But this is the most efficient way I find out, because if wick above and close above, those only, the if then principle only happens if it taps the key level, which is in a daily time frame or a weekly time frame. Now, if you go to the daily time frame, as if currently price action of EURUSD, market recently wicked above per value gap, and the only time you care about the wick above if then principle if the key level is there. So the key level got tapped. If wick above lower prices, as you can see right now, market has not been doing lower prices, but in the longer term basis, it will highly likely will do lower prices. Longer term basis into the daily candle. In the future, could possibly see it go lower because it did wick above lower prices. Right now, it's probably filling some OTE in there. Now, enough of that. Let's get to only using open high low close and open low high close, as well as using market profiles. What the market profile are there? They're the expansion profile, which market just expands in one direction. They're the manipulation accumulation profile, which market accumulates inside this range. They're the manipulation, where the market will go manipulate the opposite way that it's supposed to go. And there's the expansion profile, of the market will just expand to one direction. Eventually, there's a retracement profile after the expansion, or it could potentially be a reversal, as well as it could be a reaccumulation. So, accumulation, manipulation, expansion, retracement. It could market do another accumulation over here after the retracement, then potentially expand or manipulate, then expand. Stuff like that. You could anticipate the next potential move using these two specific concepts, which is the market profiles as well as the open high low close. We go back on a chart right around here. If you run around here using the time-based concept, which is the open high low close, we could potentially anticipate lower prices because we're above the 4-hour opening price. How do you know if the market will go lower? Is based on using time for alignment, where basically if we have a 4-hour open high low close, we're going to 15-minute time frame to anticipate where the market should highlight to go to. If you have a daily, open high low close, we can go to the hourly to anticipate, if the market should go up higher or lower. So high, if it's time for alignment. So based on a 4-hour time frame here, we're above the 4-hour opening price, so we're high likely to go short from here to make the low. Since we already made the high, we go lower. Now we're gonna include that with we're gonna add that up with the market profiling, such as the expansion, retracement, reversal, accumulation, manipulation, stuff like that. You see right over here, what did the market recently do? It recently did a expansion, retracement, and eventually market did another expansion. Market did a little small retracement, and eventually did another expansion. So what can we potentially expect here? Can we expect a reversal, reaccumulation, or can we expect another expansion? Because as well counted as a manipulation. A retracement. What can we anticipate next to happen is through using logic, obviously. So go to your higher time and drawn liquidity. My higher time and drawn liquidity is bearish. So I can potentially expect this, as well as tap the key level. When it taps the key level after expansion, it cause a reversal or accumulation. This market did a big push to the downside, so it's highlighted to be a reversal. How is a reversal confirmed? How is a manipulation phase confirmed? By CISD or order block. So it's confirmed by this candle. So now It's going to be considered as an expansion, retracement, expansion, tapping the high time frame key level, reversal, retracement, expansion. Now we could potentially look for another retracement, which market you could over here retrace to the key level. Then now we could expect another expansion after we see a bearish candle on the 15-minute time frame. Whereas well above the 4-hour candle, we did tap a key level for open high low close for the open high low close concept. It's to go open, tap a high key level or a total soup and go lower and close. So market already opened, it's at the key level, and eventually go lower and eventually close from here on forward. So we're still above the opening price. And eventually, now we're still in the retracement phase, so we can expect a very deep press to the downside because we're above the opening price as well. We are in a retracement phase, so we could potentially see the next candle being next couple of candles being expansion. So next candle, we still retracement. How is it? It's still retracement and expansion. This candle closed in a bullish candle. So once we see a bearish candle, then we could potentially anticipate an expansion. Now we can anticipate here being another expansion candle to the downside, which now in this case, but when they will, it closed bullish. So you're wrong. No, how come? Because this candle went below this other retracement, so it's going to be expansion, expansion, retracement, expansion, reversal, retracement, expansion, retracement, expansion. So it went below this other expansion, so it's automatically expansion. Now this candle is a retracement. So now we could either have another bullish candle or go lower. In this case, you can see right over here, market data expansion, retracement, another expansion occurred. Now we're currently another retracement here. Market potentially do a reversal, go up higher or whatever, because today is going to be a choppy day because it's the day before FOMC press conference. As you can see right over here, says the market was above the opening price of the 4-hour candle. It needed to go lower to make the low, which has not made yet. But we have like around 30 minutes for the candle to close. So you can potentially expect lower prices to close off this open high low close. But the best way to anticipate what's likely to happen next, the best way to read price action is through using time-based and price-based concept and aligning them together. Price-based concept would potentially be market profiles, time-based open high low close, using logic, using other market profiles such as key levels, other ICT concepts, CRT, ranges, all of that. Market sell model, market buy model, all of that to anticipate what could potentially happen next. Because all you're doing is you're anticipating when you have a fair value gap, I'm anticipating for the market to go lower. So I'm reading the price action. But this is, using market profiles, using open high low close concepts, you're going in you're going a little bit deeper, right? Like this to me could be look at expansion, retracement, expansion, retracement, expansion, retracement, expansion, reversal, retracement, expansion, retracement, expansion, retracement, expansion. Right? You can see we're going a little bit deeper into the price action. So lower time frame, we can potentially anticipate lower price. We could look to take little scalps, shorts, scalps, longs, and stuff like that. Thank you for watching. Make sure you guys join the Discord down below. Make sure you guys like, comment, subscribe, share, and join the Discord down below. Make sure you guys join the paid second group. $80 a month. I'll see you guys later. Peace out.